Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Well, Jim, today we're going to, or at least I'm going to try to give a brief description of what's happening with each of the 25 companies in the favorites collection. And for those of you who are just listening to audio, I recommend you go visit the Substack version, which will be unrestricted, where you can see the written version.
How are metal prices affecting the favorites collection?
Well, the favorites index is up 60% as of Thursday, the highest for the year after a strong July, which is supposed to be the summer doldrums months. Contrary to what you might expect, the gains are not coming from the gold-focused favorites, though they are contributing. Now, gold is now trading in the $3,300 to $3,400 range, which is fabulous, but there seems to be a lingering concern that this is still a price bubble, and this concern prevents ignition of a real bull cycle for the resource juniors. I can see it brewing, but it's not yet happening. And you can see this hesitation in my 2020 gold producer index, which is up 105% compared to 113% in June, even though gold this week was bumping at $3,400 again. The gold index has yet to break my gold trend line, and I started this at the beginning of 2020. It tried, but it's still below it. And I see this as a key signal. When the producers as a group start to outperform gold, that will be the sign that the market is ceasing to worry that gold is going to dump back below $2,000 and make this just yet another one of these false short-lived metal price rallies. Now, I do think we're going to have to wait until September to see this inflection happen. That's when the Trump tariffs and immigration policies, what they're doing for the economy, will be better felt. Right now, it looks like they're settling down to 15% tariffs with most of the countries, which is less than the 50% plus that was announced on Liberation Day. These are still significant numbers, and we may start seeing the inflation show up by September, and that, I think, will have an impact on the gold price. And all we really need for the gold price is for it to do nothing, to stay where it is, to have the market accept this is a fundamental reset, not in anticipation of inflation to come, but a new base. And when inflation does materialize, and if the U.S. dollar continues to decline, we will see additional gains add on top of that. And right now we're dealing with this crazy situation. It's very eerie. We see the senior equity markets at or near their all-time highs. We see the cryptos, Bitcoin and so on, making new highs. We see Wall Street literally rubbing its hands with glee at the prospect that they will be able to load up America's pension plans with all kinds of crypto products, and also even this idea that with the private equity stuff, we'll be able to unload these illiquid private equity investments that we've made also into all these pension plans via all these structured vehicles into which we are going to shove these things. So it's, I'm quite comfortable with the idea that $3,000 plus gold is the new reality. So let's get to the companies in the favorites collection. Vista Gold has pulled back to being up only 70% because the market's wondering what's the delay with the small-scale feasibility study for the Mount Todd project in Australia's Northern Territory. And the original feasibility study is 50,000 tons per day. The new one will be 15,000 tons per day, higher grade, lower capex, is supposed to be appeal to mid-tier producers who really can't handle the billion-dollar plus capex of the larger scenario. This was expected middle of July, and the market started to kind of ease. Oh, it's not here as expected. But I get the feeling that next week we will see what this is all about. I'm not sure what the immediate reaction in the market will be. Obviously, the NPV will be smaller because it's a smaller scale operation. The grade will be higher. We'll see what it looks like. But in any case, the NPV for the 50,000 ton per day scenario at $3,300 gold, well, we're talking a $40 plus stock. So the current pricing around 95 cents US, even if the new NPV ends up being equivalent of $20, that still leaves lots of room on the upside. Westfall Mining, which owns the shovel-ready 70,000 ounce per annum Hasbrook Gold Project in Nevada, is up 38%. Again, it's off the bottom, but it's still not exhibiting that $2 to $3 range where it should be if the market was expecting an acquisition to be done by some mid-tier producer. And what we're waiting for there is for somebody to step into that Tonopah region of Nevada and begin to consolidate all those gold projects there to create a mining hub of multiple heap leach style operations. And we thought for a while it would be Centerra Gold, but since Centerra Gold paused its work on the Goldfields project, it's not clear which party it will be. It could eventually still be Centerra, but for now we're in a waiting mode. Several weeks ago, I added Snowline Gold as a favorite after it had published a PEA for the Valley project in Yukon, and it has managed to already post a 20% gain, and the market's starting to appreciate the dual potential of a bid for the Valley deposit alone and for the potential by Snowline Gold to make another major reduced intrusion-related gold system discovery in its very large holdings in eastern Yukon. So that's doing pretty good. Now, a recent champion in the RIRGS field has been Sitka Gold, which is now up 100%, and it continues to deliver excellent results from the various zones in the RC project that it is drilling. This project is closer to the Keno Hill district. The infrastructure is better than in the Valley area. They have produced resource estimates, but they're nowhere near doing a PEA as Snowline has done with the Valley deposit. They are still trying to find where are all these zones, what are the limits, how could they eventually be put together into a general mining scenario. And so even at the price of 70 cents, this still has a lot more upside. Obviously, it's not going to go as high as Snowline Gold because it has a lot more stock issued, but still, this is shaping up to eventually also be an acquisition target for somebody who wants to develop gold mines in the Yukon. Now, Endurance Gold is up 55%, but it's still waiting for S-curve market action to explode. This week, they delivered some good news in the form of a non-dilutive financing. Usually, to raise more money, you need to issue equity shares, and usually that comes with a warrant, and that makes the fully diluted higher, and that reduces the final price that when you deliver the goods, the stock can go to. But this week, they announced they had raised $1.9 million by selling their portfolio of stocks, shares that they had gotten companies for vending projects in the past to them. And the primary position in that portfolio was Inventus Mining. They originally got about 25 million shares by vending their stake in the Pardo project to Inventus. Pardo is a very interesting paleoplacer conglomerate reef type system, similar to what I was talking about several years ago, 2017 or so, in Australia with Novo and WITS 2.0. And they have been working on this for many years. It's not as big scale as WITS 2.0 was supposed to be. But there was a 12 million or so share position bought by Eric Sprott, who was, of course, a big backer of Novo and the WITS 2.0 story. And he's now the second largest shareholder of Inventus after Rob McEwen. And what's interesting about Inventus, and it's part of my bottom fish collection on the verge of being pushed up into the favorites collection, is they have approval for doing a 45,000-ton bulk sample for that Pardo project. And they've done all the smaller scale samples, they've done all the drilling, and the big thing with the Pilbara-Witz 2.0 story is when they did all their smaller scale sampling, they realized, Quit and Haney realized, we need to do a 100,000-ton sample to really understand what the grade is because of the nugget effect of this paleoplacer gold. And but in Australia, you have this problem. You need a JORC estimate to get a bulk sample permit. So it's a catch-22 situation. But they can't generate a JORC estimate until they have the data from a bulk sample. So that whole story is stalled. It could still eventually come to life, but right now it's stalled. But in Ontario, they have approval. They did a deal with McEwen Mining at its Fox Project mill to process this bulk sample. The Inventus has to pay all the costs of it. Presumably it gets the gold from it. But this could be the key step that finally validates how do we quantify the Pardo deposit. And it does not have a resource estimate either because of this problem. So this is a big positive development. And back to Endurance, it's now busy drilling that gap between the Imperial Zone and the Eagle Zone called the Crown. And they were supposed to be just focusing on the shallow part to connect the Imperial and Eagle pit into a single elongated pit because they are working on a resource estimate. This is now expected in October. It looks like the metallurgical work that they were doing is unfolding slower than expected. So that's why they have been simultaneously drilling deeper into what they call the lower Crown and the shallower holes. So instead of having to wait till the September to get assays from the deeper holes, where last year we got visible gold, high-grade holes in there, we're going to get a sprinkling of holes for the shallow part and the somewhat deeper part, not much deep like 600 meters such as they did earlier with the Imperial Zone. So perhaps like in the first half of August, we might get some more assays that could get the market excited. Now, Solitario Resources Corp has been busy drilling its targets in the western part of the Golden Crest project, but we probably won't hear anything about assays until late August. The stock is trending sideways. It's up only 22% because really on the fundamental side, nothing has changed in the last while. But this week, we did get some good news in the form of the Ponderosa Plan of Operations application. The comment period started June 20th. It ended July 21st, and it was not extended. And in the past, the U.S. Forest Service has used, any such 30-day comment to add another 45 days, maybe more 45 days. It has been part of this deny and delay process where we just don't really want to approve exploration programs in the resource sector. And that mentality seems to have stopped. Now, they did receive 1,000 comments, but the vast majority of them are from anti-mining organizations from around the world. And the vast majority of the comments don't understand the difference between a mining permit and an exploration permit. So most of them go into the irrelevant pile. But the U.S. Forest Service is now going through the serious ones, and there is a good reason to be optimistic that by mid-September they will have approved the Ponderosa Poo for drilling. And there may be delays because there could be something that comes along. But when I recently talked to Chris Harold, there was a change in the tone of his voice. Before, it was like September 30th, drop dead. If we don't have the permit by then, we're not going to even attempt to drill the Ponderosa. If it shows up in mid-October, that's too late. And one of the reasons is there is a seasonal component to that area. The logistics become difficult as winter starts to set in. And the U.S. Forest Service, in fact, closes that forest on December 15th. So even if you wanted to without a special permit, you can't do anything in that area. But now I get the feeling that even if it's in sort of October that they get this permit, they are going to move the drill that's currently working on Golden Crest onto Ponderosa, and they will mobilize a second rig. So the only thing that's potentially that could go wrong is that the U.S. Forest Service finds something really wrong with the application, which is sort of hard to imagine because they actually ran the program for assessing this application, and Solitario simply paid for it. So worst case is they have it by the end of the year, and then all of 2026 is geared for the Ponderosa story. And there they have an abundance of targets. They've got enough drill platforms plotted that they can keep drilling for a very long time where they find it. And the fact that so much gold made it through this entire layer cake above the Precambrian basement, there is a powerful hydrothermal system going on there that is not evident on the western part of that Golden Crest project. Now, our worst performer second worst performer has been Arizona Gold and Silver. It's down 40% on the year. And on last week, I talked about how this year their drilling at Philadelphia is carrying on right through summer. They have figured out how to set up tents with misters and so on to keep the drilling crew cool during the super hot summer days. And so this will be going on throughout the year. And I also mentioned that they have applied for a 200-acre disturbance permit in that Philadelphia area that encompasses the entire area where the Red Hill hypothesis exists. They don't expect to get that until December, but that would set the stage for a very focused program heading into 2026. In the meantime, it's this incremental. Here we get another high-grade intersection. The vein, Philadelphia vein, grows a little bit bigger. There are some holes from that second drill platform that's already permitted into the Red Hill system that might create some joys. But until we see it, the market says, I'm on the sidelines with regard to that. Quartz Mountain Resources, which the Schwartz ignored during the earlier drill program this year, now has a 12-hole drill program underway, which is cross-cutting the Prodigy I target at Maestro in central British Columbia. And I talked about this recently, that their original program was focused on this understanding that the Prodigy trend, which runs northeast, southwest, is the controlling feature for the high-grade mineralization within the low-grade envelope of this target. And the results basically from those 3 holes they drilled earlier this year did not confirm that. So they still need to figure out what direction do these high-grade veins. And with this program, they should, by October, have a pretty good idea of what's going on there. Trifecta Gold Corp, it started drilling the blind GC geophysical anomaly in the valley portion of its Mount Hinton project on July 2nd. This is to the east of the Keno Hill district. They originally acquired it for the gold-silver veins that are in that area that have been historically explored. But with this model that Craig Hart and other geological academics have developed about how reduced intrusion-related gold systems work, the Keno Hill zinc, lead, silver veins that are farther to the west are very peripheral. Those gold-silver veins at Mount Hinton are closer to the source of the big system. And what they now think is this geophysical anomaly, which is under all the overburden and junk in the valley. They think this might be the intrusion engine, could be something else, but if it is the intrusion engine that drove all that mineralization to the west, this program will tell us if it is a fertile system. They would have to be really lucky to hit into that portion that has a sheeted vein system filled with gold. But this is a geological context hole. It's got 1,000 meters being drilled. It'll be a miracle if they come up with a discovery hole intersection, but it would set the stage for drilling more targeted drilling if they confirm that yes, this is a granitic intrusion that does have evidence of sheeted veining and so on, rather than some gabbro or some other thing. And they're hoping to get a permit to drill the Rye claim. That's farther east in the area where Snowline has its claims, more remote. They do have sheeted veins on surface. They get the permit, they'll be able to test that in August or September. Now, gold is sort of struggling 3,300 to 3,400, but sneaking up on the side has been silver. It almost touched $40 this week. Gold has made all-time highs this year. Silver made its all-time high almost a half century ago in 1980 and almost touched it again in 2011. But this recent push above $35, it's starting to attract the market's attention. Now, Silver North is just in the final throes of wrapping up a $2.1 million financing, which is going to load its treasury with $3 million, which is more than enough to pay for a 10-hole drill program that it's going to start in mid-August on the new main fault lens that they discovered last year. And this is the Haldane project, and it's kind of like a bookend from Trifecta's Mount Hinton. It's at the western side of the Keno Hill district, which has yielded 220 million ounces of silver, which Hecla now owns, and it's going to be mining another 52 million ounces of silver over the next 11 years. On Monday, I published an important comment on Silver North. You can read it as a standalone introduction to the Haldane story. For those of you who can't afford $10 a month to be for the Substack subscription fee, there's enough in the preview portion to explain the story, but to read the intriguing reasons why there could be this 50 million ounce plum waiting to be discovered that wasn't discovered in the last 100 years of exploration in this area, you got to subscribe to the whole thing to read it. Now, the interesting thing about drilling in the Yukon is you have a very short window. Now, starting mid-August isn't my favorite time for a program to start because your assays aren't going to flow until October, when you are getting close to having to shut down for the winter. Now, you can drill as late November, and Silver North is willing to do this if it has the results. But what we're really looking for with Silver North is S-curve market action. And that's the tendency when a project goes from target testing into, a discovery that we are now delineating. The market becomes very interested and begins to speculate, well, how big can it be? And right now the market's thinking, yeah, we can see a $500 million future potential target, and we're pricing it at around $23 million because, the odds of them actually delivering that are 2.5% to 5%. So this is fair speculative value. But we have just a sort of a two-dimensional slice of this lens, and what we need to see is them to step a long dip, a long strike, and down dip, and flesh it out in 3 dimensions. And normally with a drill program, you have to wait for assays to find out what you have. But in this case, because we're dealing with Keno Hill-style mineralization, the galena, the lead sulfide, the silver's associated with it, and the zinc comes along with also. It is quite visible. It will show up in the core box. So once they get drilling and get several holes in there, by mid-September, they should have some visuals that will tell them, oh boy, this zone is starting to blossom in the 3rd dimension. And that's what the market wants to hear, because that means they'll probably push the drilling right into November, and And the assays, we won't know exactly what the assays will be, but we know that if it's the same style of mineralization that they intersected last year and it's growing, then we'll get sort of the play-by-plays and the incremental assays. That will fuel S-curve market action. So this is not one where you just have to, forget about it and hope that there's a play next year. This thing could come alive this year. Now, a similar type of story, except it's not vein controlled, is PJX Resources, and it's supposed to be taking a second crack at the Sullivan 2 hunt at the Dewdney Trail project in southeastern British Columbia. It's up only 30%. Last year, everybody expected things to be simple. They found these high-grade SEDEX style boulders in the talus at the base of this mountain. The mountain was sort of covered by a young dike that was like a sheet, like a curtain covering it. But they could tell that this was a sedimentary layer cake from the age when the Sullivan deposits formed. So it's just a question. We need to drill some holes through this, and then we'll find what layer that the SEDEX deposit is actually located. But when they got around to doing that, it really wasn't like that. It turns out that there's more folding going on in this particular mountain than they had hoped, which means that something that was once flat-lying and that should have been dipping to the northeast into the mountain, exposed somewhere along the face of it, well, it's sort of been twisted, spindled, and mutilated. And by the time they realized that they were just getting peripheral evidence of a major system, it was too late in the season. And the delay this year has been they wanted to push a road into the area where they see it as most optimal to put holes in to figure out what the geometry of the folding is and tag into actual high-grade bedded massive sulfide zinc lead silver mineralization. This is also something when they tag into this and it's in the box, even the drill crew will know what this is all about. And John Keating will have to come out from his cone of silence that he likes to go in during drill programs and have to put out a press release and say, yeah, we intersected this stuff. Don't know what the grades are going to be, but this sure looks like the stuff that we found in the talus at the base of the hill. And silver, of course, will help with this. Zinc is the dominant material that you're looking for in this type of SEDEX deposit, and zinc has held up pretty well. It's in that $20, $25 range. Now, the reason, last year the excuse was they were going after this 5-year permit, extensive, where they can do stuff anywhere, and they didn't get permission to drill until about August. Part of that was a logistical delay because of the timing of when they did get approval. So we were kind of expecting they would be starting earlier this year. But because of the road building, first you had to wait for the snow to go away, and then you have to do something called a biological sweep. So part of the delay has been the biologists going in there and assessing what vegetation is in there. And one of the things they're concerned about is the white pine that grows in the area, or at least used to grow in the area because it was devastated by a forest fire some years ago. But we all know that forest fires actually make pine trees, all the cones and that, erupt and start to grow again. And so, what I think they're worried about is that when PGX goes in there, they may disturb some of these young trees and possibly harm the resurgence of the endangered pine bark beetle, which dines on these particular trees. Anyways, in the meantime, they have decided to raise $1.6 million through a private placement of flow-through and common units at 14 and 12 cents. Probably a good idea to do because they were down to $2 million plus, and they're definitely going to spend that. And this may not be the year that they deliver that discovery hole. It may simply set the geological context where a really big program can finally track down this Sullivan 2 next year. But if they haven't delivered it this year and have no money in the treasury, that's going to mean dilution at a lousy price. But again, here with this story, if right now the market's not going to give you any anticipation premium, they're going to wait for news. We have something in the box that visually is what we're looking for. And that's where you might get S-curve action going, especially if this manages to show up in September rather than in November when the snow comes in there and chases them out. Now, the price of copper continues to have a split personality where the LME spot price is, around $4.47 a pound, while the COMEX contract is around $5.80 a pound. This is because Trump is rumored to have proposed a 50% import tariff on copper. And that is what American manufacturers, end users who need copper in their products would have to pay for the copper that's imported. So the COMEX price is reflecting this higher price, and it's kind of crazy that this is the policy, because it doesn't matter if the copper price is higher today. That's not going to stimulate new supply, because it takes so long to find, develop a copper deposit. This import tariff makes no sense at all. And in the last Kaiser Watch episode, I talked about it. This is a wacko idea that needs a taco, but I'm not sure whether we're going to get the taco on this. But it is good. It doesn't hurt any copper plays anywhere else in the world, but it has been good for American-based copper stories. I talked last time about Faraday Copper. Well, since then, they have managed to raise $45 million in a bought deal. On July 14th, they said we have $30 million at $1.10. The next day, it was up to $45 million. There's no warrant attached. Now, of course, the stock is pulled back because it was done at a discount to the market, and we have to digest this financing first. But now their treasury is fully loaded. The stock is up 61%, and that rise was mainly due to the fact that the BLM finally granted them this major permit that allows them to continue to infill drill the zones that are part of the PEA that they did a couple of years ago. But they've also got brand new targets that could deliver something bigger and better. So now we're heading into a drilling season where there could be something new and different that gets the market super excited, while the existing resources, both underground and open pitable, continue to be advanced. Another junior that stands to benefit that's on the favorite list is P2 Gold. Now, it's up 125%, which seems to be better than what Faraday is, but then that's from a much lower base. It's around 14 cents right now. Now, they updated their PEA for the Gabs project, which is a copper-gold deposit in Nevada. They did that in 2024, but the stock is kind of just languishing there. There's no buzz about it because they're in the middle of doing metallurgical studies to boost the recovery for the gold and the copper for the various processing scenarios that they have developed, and they're waiting for permits to happen so that they can do additional drilling. And in addition, the market's not excited about the balance sheet. There's still $1 million owed to Joe Osinick and Ken McNaughton. Plus, there's a $1.3 million debenture due in January 2026 that's owed to Waterton, which is the Gabs vendor. But this debenture is convertible at 10 cents, so it will probably be converted. Now, what the market's ignoring is that PEA update they did last year, they used 1950 as a base case price for gold, and they showed that at 2,414 the gold spot price back then, the project had an after-tax NPV at 10% of a $530 million US, while CapEx was only $366 million. So that project at that price was in the money. But what if you plug $3,300 gold into that discounted cash flow model? Well, it's going to be even bigger and better. And this project is front-loaded with the gold production, which would come from heap leaching the oxidized cap that sits on top of the copper gold sulfide porphyry resource at bottom. So I think at some point here, when the market stops thinking that gold's going to dump back below $2,000, you're going to see a much stronger interest in P2 gold than is happening right now. And I think this stock will be a lot higher than up 125% by the end of this year. And if this, special copper price for American manufacturers continues, plug in that number, and that helps the project also. The worst performing favorite has been VR Resources. It's down 58% for the year after it drilled the Silverback target in Ontario, and it failed to deliver a gold discovery. The story isn't dead. They are in the field doing low-cost target development, with surface studies and sampling and so on. But the market doesn't care about that. But what they are doing in the background is they are now talking to potential farm-in partners for the Bonita and the New Boston projects that they have in Nevada. And these are copper-dominant projects, and they don't have enough money to continue the exploration required for that. So if they can do a strong farm-out, that will be a bit of a redemption in the eyes of the market for VR Resources. Somebody else will be spending money to advance these projects, on which a fair amount of money has already been done. There's a lot of geological context development that's been done. So whoever takes it on will have a much better idea of where they should put expensive drill holes. The Toodoggone District Rethink play, which had a lot of momentum earlier this year, it features A-Mark Resources with the Joy project and TDG Gold Corp with the adjacent Baker Shaster project. It's not benefiting from the COMEX copper price because, of course, this is in British Columbia and Canada, so whatever they get for their copper will be the cheaper LME price. But with the gold spot price at $3,300, that doesn't seem to be making much difference either. Now, A-Mark's up 13% and TDG is up 12%, but they are up 254% and 374% from the bottom fish collection prices at the start of the year. I graduated both of them to the four favorites collection after A-Mark announced the Aurora discovery in January. Now, Freeport has apparently technically vested for 60% in Joy by spending $35 million, but it has not yet given the formal notice which sets the clock ticking for a decision to go to 70% or form a 60-40 joint venture with A-Mark providing 40% of the cost. They would have to spend $75 million to go to 70%. However, Freeport has authorized a $10 million budget for the summer program, and A-Mark will not have to reimburse any of that if at the end of the day Freeport does decide to form a 60-40 joint venture. So A-Mark is getting a free ride on this summer's work. Now, this work is going to go into the Aurora area, and that's where we got the very high gold grades with pretty good copper grades, much better than what you see at the Chemis operation of Centerra. But in terms of volume, it's constrained from the drilling done so far. They had done some step-out drilling earlier, and those didn't deliver the results that were hoped for. But it doesn't have to be one large continuous body. And Freeport's goal this year seems to be to assess that entire area there in the Aurora area with big step outs to see what's there. And it's also decided to participate in the 100% Brenda option that A-Mark struck with Canasil earlier this year. And, of course, they've done this deal with Finlay Minerals on both the Pill and the Anti-Addy projects. And A-Mark has said, yes, we're going to participate also in the Pill option because of the area of interest. But the area of interest extends only into the southern part of that property, so they will only get a piece of the action for a part of that. Now, how enthusiastic is Freeport about this? Well, on July 17th, the deal that they had done with Finlay, originally it was to spend $750,000 on Pill this year and $500,000 on Addy this year, which was okay. You're going to do target development work, not so good for Finlay Minerals. But on July 17th, they upped that to $2.6 million for Pill and $1 million for Addy. So this means there will likely be some drilling involved. And what I see happening here is Freeport is going all out to assess everything that is going on in this area. And that's both good news and bad news. The good news is if it likes what it sees, it'll probably go to that 70% where it needs to spend another $75 million on the Joy project. The bad news would be that, it just doesn't have the Freeport size that we want, and they stop all these option deals and just sit back 60-40 and then ask, hey, Mark, what are you going to do now? So the outcome of the drilling this summer is going to be very critical with regard to what Freeport does next. Now, TDG, for its Baker Shasta project, it has completed a geophysical survey, an IP survey that covers the western extension of the Aurora system. They do see an IP anomaly, and interestingly, they see detached from the shallower one, a deeper one that sort of rakes off to the southwest, and they're going to be expanding this IP survey to see what's going on in that southwest direction. So they have two potential targets. Now the market's kind of lost interest in TDG, and that's because they decided to acquire Antioch Copper for 54.6 million shares, deemed at 60 cents, of which 25.5 million shares went to 11 parties who are insiders of Skeena Resources. Now, Antioch Copper is a former VMS mine that is now an environmental disaster site, and I, along with many others, have serious doubts about the wisdom of acquiring this project, which various groups have looked at during the past 20 years, including an ASE-listed company. The 60 cents deemed value makes that Antioch Copper worth $33 million. Now, when Skeena showed up out of nowhere earlier this year and invested in TDG, pumped $15 million in, that was a good thing. And of course, there was no connection between Skeena and the TDG shareholder base or management. So when you have suddenly like half this paper, half of $33 million worth of paper suddenly being issued for an asset that's brand new and unrelated to the primary focus, you wonder what is going on. Now, they have a presentation on their website about this merger, but it's all full of this sort of blah, blah, blah buzzword stuff about synergies and so on. And at the end of the day, it was a single VMS deposit that was mined out, and the story is, well, these deposits occur in clusters, and we're going to find more. Well, in my mind, that ain't worth $33 million. And but they have managed to, as part of this, raise another $30 million through financing, so that they're up now they've raised $45 million for the year. So I guess if this is what it takes to get another group to bankroll you, plug in these other shareholders, these other insiders who have no stake in TDG, put in this project, which is basically an exploration project in an environmentally messed up area, well, I guess so be it. But they've also threatened a 5-for-1 rollback. So right now, TDG isn't on my favorites, amongst the favorites of my favorite. I'm waiting to see if there's a better technical story behind Antioch. And then, of course, they are drilling now on the Aurora. We'll see how much of it extends onto their property. The uranium price has had a nice rebound this year after crashing down to almost $60 a pound earlier in the year. It almost got to $80, but since fallen to $71 per pound level. But that's not what's responsible for the 46% gain in Canalaska uranium has delivered so far this year. What is driving the increase in Canalaska is ongoing delineation at the high-grade Pike Zone at West MacArthur, which is really starting to come together. I mean, this is deep. It's around 800, 900 meters deep, so you have to drill a mother hole, and then you have to wedge off it, and it takes time, and you do small step-outs, and it's painfully slow. But what recently helped the stock up is they reported geochemical assays for holes drilled in the winter, which were much higher than what they reported with their radiometric readings. Now, Canalaska has the technical capacity is when the core comes into the box, they drop a probe down the hole, and they take readings of what the surrounding rock's grade is. But this probe has limits. It can only read so and so high. So these numbers were great, like 40%, 89%. This is the sort of stuff that you find in the MacArthur zone itself. And while I've argued that this setting here is the potential for another MacArthur, million ton, 16% MacArthur deposit, 380 million pounds. When I run a DCF model with the kind of costs associated with developing that's worth about 5.5 billion Canadian. And the pricing right now for Canalaska's 86% or so stake in that, it's really within the fair value range for a project that's still at discovery delineation. But if the market were taking seriously that this is another MacArthur clone in the making, we should be seeing S-curve activity right now. The stock should be pushing up in the $5 to $10 range. But it's not. The market is still behaving rationally, waiting for the data to show it. But if we start getting more of these step-outs within the Pike Zone deliver high grade, and the summer program that's now underway, it's testing more targets along that structural corridor. Part of this story, the whole MacArthur story, is the string of pearls. If they start hitting other pearls, other high-grade pearls, that could trigger the S-curve, because then the market will say, it's just a function of brute force drilling. In fact, what Cameco had to do and when it discovered MacArthur is it did enough drilling to figure out what was there, and then it had to actually drive and add it down and properly delineate the system efficiently through underground drilling. And that may end up being the next step for West MacArthur. So I think this summer drilling is going to be, I think, very important because they know enough about the whole project. They're stitching the main Pike Zone together, and we could see liftoff happen, even if uranium still sits here and bumps around in the $60 to $80 range, which is what's needed to make these type of deposits are worth developing. The price of nickel continues to reflect the flood of dirty Indonesian nickel into the market, and it's also sort of like with Trump forcing everybody to not care about clean energy. That's not particularly helpful for projects and jurisdictions where it could end up being packaged as clean energy. And that's weighing on FPX nickel, a favorite. It's up only 6.4%. It's the project is plotting towards feasibility. The only recent news is that they bought 720,000 shares of their own shares at an average price of 24 cents as part of a normal course issuer bid. And to me, that really makes no sense because they've already signaled that, yes, we do not have enough money to fully complete the feasibility study to a permitted level. So it's just tracking sideways, waiting for some train wreck to happen in Indonesia that disrupts the supply of nickel. And Indonesia is starting to get cranky about the way the Chinese have operated these smelters and facilities there. So there may be some dialing back of the flood of nickel coming out of Indonesia that allows the price to get back into that $7 to $9 a pound range, which is really needed for cleaner Western operations to produce nickel. Our two prospect generator Farm Out Juniors, Eagle Plains Resources, and Silver Range Resources are up 47%, 69% respectively, though these do come from low bases. These two juniors have historically specialized in farm outs to other juniors or private groups, and demand from this corner remains weak. Again, we do not yet have a validated secular bull market for resource juniors underway. I've argued that we are seeing signs that it is starting to develop, but the breakout has not yet happened. So we need this to happen for the phone to start ringing off the hook for Eagle Plains and Silver Range from other juniors and groups, saying, what have you got? What's ready for us to spend money on and do a big drumbeat on? Nevada Organic Phosphate is up 80% as it inches closer to being able to start a drill program at its Murdoch Mountain Organic Phosphate prospect in northeastern Nevada. Robin Dow has raised enough money to pay for the reclamation bond that the BLM requires to allow drilling to start, but the next challenge is to raise enough money to start a drill program before the sage grouse constrained drilling season ends in November. Once drilling is funded and underway, it really would only take them 6 to 8 weeks to get it done, and within 3 months of that start, we should have the assays that tell us, that confirm that yes, it is way below the toxic limitations that the FDA requires, and this will qualify as organic. It can be simply ground up and shipped as a whole rock product to groups that want their crops to be organic. But it is a struggle. For some reason, Robin Dow has been unable to really attract an audience that appreciates the organic aspect of this lower grade system, which is the ones in Idaho that are 35%. They're full of not only toxins, but but radioactive materials that all have to be cleaned out before it can be delivered as a product for agriculture. And that, of course, makes it stop being organic. Now, the lithium carbonate price remains at around $4 a pound, and that's well below what is needed to mobilize new lithium supply and even keep existing mining operations profitable. But oddly, Albemarle has bounced off its June bottom, and Patriot Battery Metals also did that. It's up 28%. Even Tesla bounced back after Elon Musk wailed about how Trump's policies are hurting the EV future. And I'm beginning to wonder, are these an indirect hint of a post-Trump history where interest in electric vehicles is on the rise again? I'm kind of puzzled by Trump's recent decision to sue Rupert Murdoch for $10 billion after the Wall Street Journal published an article about how close he was with his pal Jeffrey Epstein. But this was like ages ago, and Trump's lawsuit reaction was quite predictable. But what was not predictable was that Rupert Murdoch, who was who had let Trump know, did not acquiesce to Trump's request to just kill this article, and he let it go ahead. And now he has this $10 billion lawsuit, which I guess was predictable. Well, why would he do that? He's already taken an $800 million bath because his people insisted that the voting machines were compromised, that the election was stolen, which was not the case. And the fact that he'd be willing to create this conflict with Trump, I think it's a sign that people like him are realizing that the brand he built of, Fox News as this bastion of American conservatism, its mutation into MAGA is turning into something that isn't really what conservative America is all about. And it's as if he has walked into the ring for a clash of titans with Trump. So there's a showdown brewing here, which may result in the marginalization of Trump in the not-too-distant future. And what Rupert can do is he can kill all the more extreme MAGA people, just boot them out of Fox News, and yes, they'll go to the various social media channels where all the other sort of MAGA influences are located. But that ends up dispersing the primary MAGA audience, which is pretty much glued to Fox. So this is a potential risk for Murdoch himself, a risk he's obviously thinks is worth taking. So it'll be interesting to see how that plays out. Now, the big jump for Patriot battery metals happened on July 20th, and it was for a very special reason. At its Jackie Chu project in the James Bay region of Quebec, they have announced the presence of discrete high-grade zones of pullusite. And that's not spodumene, that's pullusite. It's a separate mineral which will form within these zoned pegmatites, and it hosts high-grade cesium. Now, cesium is an obscure element. It has very specialized uses. The biggest deposit used to be the Bernick Lake deposit at the Tanko mine. That stopped operation ages ago. A Chinese company called Sinomine owns it. The only cesium ore that's left are in these pillars in what was an underground mine. And there's some proposal to sort of empty the lake and try to get at these pillars in some other manner. And this is in Manitoba, and that's not really going anywhere. But nobody really knows where cesium is coming from these days. It's very important to oil well drilling. It has all kinds of strange applications in medical technology. And in terms of the value of the market, although this stuff trades like $2,500 an ounce, it's worth more than platinum and palladium. The value of what's consumed each year is quite low. But the strategic importance of having these discrete zones in the Jackie Chu deposit of Patriot battery metals, this suddenly makes this deposit a priority to develop. Now, it's already world-class in terms of its lithium potential, but given the uncertainty about the electric vehicle future, you might hem and haw. But if you're willing to bet that the electric vehicle future will make a comeback when this anti-energy transition stuff of Trump finally disappears, and you have your choice of different high-grade pegmatite projects around the world, which are you going to choose? Well, you're going to choose the one that has these pullusite zones that can be separately mined and supply the world with all the cesium that it needs. So I thought that was a big development. Colonial coal, that's our metallurgical coal story. It's down 12% for the year. We have been waiting forever for this, buyout to happen from India or somewhere else. It hasn't happened yet. Citibank has supposedly been working to introduce this project. Not helpful has been the fact that metallurgical coal price has now dropped below $200 a ton, and possibly all the turmoil about where the global economy is going in the wake of America's export tariffs or import tariffs. Maybe that's holding it back, but at the moment it's not adding to the upside of the favorites collection. The big winners are Sunrise Energy Metals, which is up 460%, and Aclara Resources, which is up 260%. And I talked about these recently. Sunrise Energy Metals, its project is Syerston, the world's richest and biggest scandium deposit in the world. They have raised $7.5 million to continue feasibility study, do an updated feasibility study on developing this. And they're also working with various groups to develop ways of making very high-grade scandium metal, 40%, the kind that's needed for those chips that are essential for these chips that are used in 6G technology. which amongst other things goes into drone warfare. So having a reliable supply of scandium is very important. This week, it got another boost from Bloom Energy, which had, a month or so ago said, put out some report that these data centers that are doing AI, they're not going to get the power delivered to them that they require as they continue to grow. This week, Bloom Energy announced that it has a deal with Oracle to install its Bloom boxes at the Oracle data centers that do all this AI crunching. And this is a big deal because they can almost all these data centers have natural gas piped to them to heat the place. And these solid oxide fuel cells, they use natural gas to create electricity, and they have a much lower carbon footprint than the natural gas that's produced in the big giant power plants. But the difficulty in getting the transmission wires to all these data centers to deliver the electricity, this is creating big delays. And now we have Oracle saying, yes, we'll do this. We will see other data centers do this. And of course, these solid oxide fuel cells require scandium. I heard once it was like 8 kilograms for about 100,000 watt-hour capacity. I've heard they've done efficiency work. It's down to 4 kilograms, but it's still a fair bit. Now, the problem with this usage is China and America are in an AI race, and of course there's obvious military implications for this, and scandium is already on the restricted list where you have to prove that you're not using it for the U.S. military purposes, that is only for civilian use. Well, technically this is civilian use, but China can now say, you're installing these Bloom boxes that use scandium in these AI centers, which are all part of the American AI-driven military complex. So no more scandium for you from our titanium waste. So this suddenly creates a new urgency, I think, for Bloom Energy to secure a non-Chinese supply of scandium. And this is going to be beneficial for Sunrise Energy Metals and its Syerston project. And Aclara Resources, it of course is benefiting from the deal announced a couple of weeks ago by the Pentagon to invest money in MP materials and guarantee a price for neodymium and praseodymium at double the price of what it is right now, the China price. So the China price about $60 a kilo. They're going to pay $110 a kilo guaranteed. Plus they're funding a magnet factory so that we don't have to rely on Chinese-produced magnets, which are also part of these export restrictions. And Aclara, of course, their project is in Brazil, and meanwhile, America actually has a trade surplus with Brazil, and so slapping exports on Brazil makes no logical sense, but because he wants his buddy Jair Bolsonaro not prosecuted for trying to mount an insurrection, he's threatening tariffs on Brazil, but the rest of the world, they don't give a damn. If Brazil is going to produce the whole mix of magnet rare earths, including terbium and dysprosium, the heavy ones which Mountain Pass cannot produce, that's great. So this whole deal is putting a spotlight on the idea that the rest of the world is going to have to pay more than the China price if they want a secure source of rare earth. And the existing PFS or PEA, whatever Aclara has for the Carina project, it uses higher prices than the spot prices. And, of course, now the stock's benefiting because the American development shows that the world is waking up. You cannot rely on the China price. China uses it as weaponized rare earths. It's using it to manipulate others. It's just going to be too bad, China. We don't care if it's cheaper. The rare earths are actually a fraction of the cost of all these technologies and things. We're not going to be jerked around by you. So that's why Aclara is heading higher. And in the past week, they did some deal with Stanford to apply AI methods to look at other of these ionic clay deposits, which apparently are all over the place, but not all of them have elevated heavy rare earths in the manner that the Carina deposit does, and in the manner that the deposits in Jiangxi province of China have. But China's busy depleting those deposits, and so this is kind of a new ionic clay story with a heavy rare earth twist. So the rare earth prices continue to suck big time if you want to buy them from China, if they'll let you buy them from them. But the shift now, it's a different type of rare earth mania 2.0. It's not based on prices going way up and everybody rushing to move their deposit into production. It's more a strategic thing. Who can develop theirs relatively quickly and scale it up when needed? We figure out a price that makes you a profit margin, and we're going to have government money, China style, go into these projects to make it happen.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.